Let's get a quick check on U.S. futures as we prepare for the Federal Reserve policy decision later on. The Dow about 28 points higher at this stage, so inching higher. NASDAQ about 27 points lower. S&P 500 looking at a flat start if these levels hold. Let's bring in Thomas Costerg, senior U.S. economist from Pictet Wealth Management, to prep for this Federal Reserve decision. Thomas, great to have you with us.
Hi, good morning.
After the big disconnect earlier this year between what markets were expecting and what the Federal Reserve seemed to be predicting, now it seems as though markets are generally on track with what the Fed is expecting at this stage. In terms of today's meeting, what could rattle the markets?
Right, and indeed, I think the market has moved quite quickly in pricing. Almost 3 rate hikes next year. I think the market saw inflation becoming more of a risk than the Fed, and actually it's the Fed that has to catch up this time with its inflation forecast for 2022 likely to be revised up quite sharply. I think the dot plot is unlikely to match the market's view for now. I think the dot plot could show 2 rate hikes are expected next year versus almost 3 for the market. I think also Jerome Powell will continue to say that rate hikes will be very gradual. So I don't think the Fed wants necessarily to increase market volatility at this stage.
Thomas, you're obviously an economist, and you've been, no doubt, trying to understand what the impact of Omicron will be on the economy. In terms of inflation in particular, what's your base case for the net effect? Clearly, it's going to have both supply and demand impacts.
Yeah, and so there's a positive net effect on inflation, and there's a positive negative net effect on growth. But what is interesting is it seems to me that the Federal Reserve is a bit more sensitive to the upside risk to inflation coming from Omicron than the downside risk to growth. It's coming at a time when I think the Fed is a bit more watchful of the upside risk to inflation in general, and the risk that expectations start to change, and that you have also a new inflation mechanism starting to kick in. So it's interesting to see that the Fed is indeed watching more the potential upside risk to inflation from Omicron than the downside risk to growth. And I think that will be the assessment after today's meeting.
And what does that path look like, the path to upside risk to inflation? Is it going to be the result of supply chain disruptions as a result of Omicron? I mean, I can't help but think about what's going to happen in China now, which has been the ultimate source of so much of the supply chain disruption, which has ultimately led prices higher everywhere.
Yeah, and it's again a story of supply chain disruptions, I think. Well, now in the U.S., I think, I would say that probably 25% of the inflation we're seeing is also demand-driven. So, I mean, let's face it. I think the U.S. government was very generous in terms of its fiscal spending. Now, but if you look into 2022, I don't think we should expect additional checks being sent to our households. So I think it will be mostly a supply chain bottlenecks story. But I still think that inflation should come down, especially in the second half of next year, as bottlenecks start to ease and commodity prices as well try to find a new level. So inflation should remain high in the coming weeks and months, but I think it will decelerate quite sharply in the second half of next year.